Hey everybody, welcome into our live stream today. We're going to be talking about the top 10 worst housing markets for investors. I hope everyone is doing well. Welcome into the stream. Let me know where you're all joining us from today. Sorry I was a few minutes late as I was getting my elements set up. Let me know where you're joining us from. As hope you guys had a wonderful holiday weekend. So we're going to start the show here in just a few minutes. Just like to let the YouTube alerts go out there. Hey, Bill. Bill is here. Good to see Bill Purdue. No, Lindsay, I'm not sick. I think I have like a random cough like once a day now. So it's like just the remnants of this thing. But my wife, she's still coughing like crazy. She's like, no, it's better. It's better. Like, yeah, but something's fishy. See, I believe because I went into the ocean, it healed me up. And that's what all of the, everyone says. You go in the ocean, and I was in there for 20 minutes, and literally the cough was gone like the next day. I had like little remnants, but mostly it was all gone. And then Natalie kept coughing, and it's been over a week now, and she's still coughing like crazy. And I'm like, I told you, should have gone into the ocean, but they don't listen. They just don't listen. Hey, Ricky Brown is here. Good to see you. So again, we're going to be looking at some new reports out about Florida Atlantic University, looking at America's most overvalued housing markets. And I think this is important because I think a lot of people, whenever you're watching mainstream media, a lot of the times the mainstream media is always going to focus their housing-related stories on a retail buyer, the young family that's moving in and going to buy a home. They never talk about us investors. They just don't cover that beat. It's just not part of their. And for me, it's two different worlds. What might make sense when you see these articles that are like the best housing markets in America. What they mean is the best housing markets for like first-time homebuyers or for people to live. They're not talking about like the best return on investment or all of the factors that go into a great real estate investing market. Totally different. There's some spillover, There's some overlapping, I guess is the right. But for the most part, that's different. And so we'll talk about that today. I'm just waiting for people to jump on here. Nikki Jones is here. Good to see you, Nikki. Boy, crazy day today. Everyone, most people like back to work, and the market's kind of a little interesting right now. Everyone's wondering what's going to happen with this inflation and the U.S. dollar. Also in El Salvador today, El Salvador became the first country to adopt Bitcoin as currency, which was pretty remarkable. And McDonald's started accepting Bitcoin. Crazy. And then Bitcoin took a dump, dropped from like 52 down to 46, jumped back up again, and a lot of governments are buying up Bitcoin right now, and real estate. So get these like ultimate store of value. Real estate, gold, silver, crypto, as the U.S. dollar continues this. I mean, I don't know how much longer the U.S. dollar can go on like this. Hope you guys had a good holiday. What'd you guys do for your holiday? Anything good? Anything fun? did lots of cleaning, Lindsay, on your holiday. I need to do that too. All right, let me see what I got here. There's literally somebody on my roof right now, so if you hear some racket in the background, okay. All right. Bill, is that how the Noke? Is it Roanoke and the Noke? All right, let's see if I got to do something real quick and move this over. Problem with technology is that it's both good and bad, but sometimes it creates all kinds of hindrances to my flow. All right. All right, let's see. Okay. All right, everybody. All right, here we go. Welcome into the Real Estate Investing Show. Hope you all are doing great. Today, we're going to talk about the 10 housing markets that you should avoid as investors. Now, again, I see mainstream media, and anytime I see mainstream media news articles or stories or CNBC, et cetera, they always do housing-related videos and stories based on people who are going to move in and live in the property, a retail home buyer. When they talk about housing prices, what they're talking about is the retail home buyer. They're not talking about us as investors. They never cover us as investors on those channels. They don't understand what we do, looking for a high rate of return, a really strong internal rate of return, understanding that we're investing in the best landlord-friendly markets in the country, et cetera. They don't understand that. They don't understand what we look for. And therefore, the stories that they cover on mainstream media are always going to be geared towards, I'm a young family and I'm buying a house, and what city should I move to live in? So that's where a lot of this stuff usually comes from. And I have to say, one of the most popular topics questions I get is about rental markets. Many of you on my phone calls and live streams, you ask me about rental markets. People always want to know, is this a good city to rent a property in a rental market? The truth is that market research is incredibly important. It can take months, even years sometimes. So in the markets where we build our properties at Morris Invest, where our team is researching these neighborhoods, we're spending a long time looking at the housing markets, looking at the crime rates, looking at the vacancy rates, looking at the schools, looking at the population growth and the businesses that are moving. There's a lot that goes into this. And so, yes, there are a lot of cities across the country where, given the time, the attention, and the groundwork over a year or so that it takes to study a particular area, yeah, there are a lot of great areas to invest. But the truth of the matter is that we don't want to spread ourselves too thin, so we focus on a few key areas where we like to invest. But today I want to talk about 10 markets that are in a part of a new report that is out that talks about the areas where you should not be investing, because these areas, frankly, have a number of factors involved, but most notably is they're way overblown in price, way overvalued. that's one of the kind of common themes through this data is just how overpriced these things are relative to the value you're going to receive as an investor. Now, again, might be great for you to live in. Like if you're going to move to one of these particular cities, great. And you're going to stay there for 30 years and you don't really care about how much you're overpaying for that property. Where a few years ago it was $300,000, now the house is $500,000. If you're okay with that, great. But as far as an investor goes, the numbers are going to be totally out of whack. So 9 times out of 10, I can't tell you, if your city is a good rental market. I just don't have the data, frankly. But what I can tell you is you should always look for, I can tell you what you should look for in a stable rental market. In fact, I've got an entire video on what we do for comprehensive market research. So we'll link that up here after this live stream is done. We'll link it up in a card here so you can check that out, what we look for as a comprehensive rental market. We'll also have it in the description of the video so you can check out. If you watch that video, you'll know that one of the top things on that checklist is appreciation. And for me, there's really a sweet spot when it comes to appreciation. I don't invest primarily for appreciation. That's not what I'm looking for. I like to look at it as sort of icing on the cake for my investments, but I do like to see consistent growth. I would like that on top of it. Again, it's not the main reason I invest, but I would like consistent growth. And frankly, I actually prefer boring appreciation. I'm not talking, San Francisco Bay Area where you have this flying off the shelf appreciation. But then you've got high crime, you've got all these other factors. So on the surface, these CNBC stories be like, one of the fastest appreciating areas is, San Francisco or whatever, but they leave out all of the other data points that are important to me as a real estate investor. So that's what we're going to talk about. I don't like super crazy high appreciation. I also don't like lower than normal appreciation. So a nice little sweet spot in the middle there. Because if you invest in a market with crazy appreciation, what you're going to see is chances are you're going to be overpaying for the property, bottom line. And in turn, you're going to be making lower returns. All the time I get people saying to me, well, Clayton, I live here in California. What should I do? All of the homes are just, over $1 million. It's ridiculous. Last week on the show, we showed you that burned house that was literally in ruins, burned, and it was selling for $800,000. That's California. So then you need to think about other markets that aren't in your backyard. You need to start thinking strategically like we do as real estate investors. So I always follow this guideline about appreciation, but really now more than ever, I would say that this is something that you're not going to want to overlook because the pandemic has contributed to really hot markets in many areas. And the last thing I want you to do is to get into a real estate deal that doesn't pay off. Like you read the headlines and you jump into some of these markets because you hear about it. I would say 2 or 3 of the markets we're going to cover today on the show, I get asked about all the time. And these are markets I want you to avoid, okay? These are markets that are way overvalued, and you're just not going to see the returns. And it's super competitive, overvalued, and you're not going to see the returns on investment. So we've got a new study today that I want to get to. It's a new study from Florida Atlantic University, and it looks at America's most overvalued housing markets right now. And today I'm just going to pull 10 of these, the top 10. These are the top 10 markets from this study, specifically the 10 most overvalued markets in the United States. These are cities where you will not want to invest because you'll overpay and you're going to end up with low returns. So to kick this off, let's start out in California. So the first market how about I plug this in so you can actually see my laptop here? That would be helpful, wouldn't it? Great. Thank you, Clayton, for plugging in your laptop. Again, technology. Let's see if this works. Okay, there we go. Perfect. No, that's not perfect. Okay, here we go. Actually, it's all zoomed in. Okay. Anyway, okay. The very first market that I want to take you to is Stockton, California. Stockton, California, the county seat of San Joaquin County in Central Valley, is was a huge spot, of course, during the gold rush. And if you remember, I don't know if you remember Stockton really being ground zero for the housing crisis in 2008, where they were building properties as quickly as they could. And of course, way overpriced, way overvalued, and giving away mortgages without any job. You didn't need a job. You didn't need income. You didn't need anything. You could basically get a mortgage. And they were building these houses like crazy. Of course, famously, 60 Minutes did a whole piece on this in Stockton, California, was walking these houses where they were just totally empty. It almost looked like nuclear fallout from the 1950s. Like that's what these towns looked like. No one living there. And then when they came upon certain properties, there were individuals who were renting properties. And when they knocked on the door, they were basically saying, hey, wait a minute, my landlord's in default? Well, I'm renting. What's going to happen to me? They even featured some of these homes in the movie The Big Short. So Stockton, California, an area that is incredibly overvalued right now. Again, that's number 10 on the list. 38% overvalued premium prices right now. When you look at Stockton, California, as opposed to some other markets across the country. So number 10 on the list is Stockton, California. Let's go to number 9 on the list. Number 9 on the list is, again, this is one of the 3 cities that I get most questions about. This is the city of Las Vegas, Nevada. So Las Vegas, also one of these markets that is incredibly overvalued. And you're going to see a theme here. The theme you're going to see among these cities is that these were cities that were hard hit during the last housing recession. They overbuilt and then sat vacant and had huge glut of empty properties. Las Vegas was a big one. Also, Las Vegas has a bunch of other issues that I am not a fan of. The fact that it is not recession-proof or pandemic-proof also, because it is a tourist area. So when you have a pandemic like we experienced, and you have all of these people who are suddenly not going to the different casinos and everything else, you're having all these job layoffs and these houses that are sitting there vacant. Huge problems in Las Vegas, Nevada. So Las Vegas at 41% overvalued right now. Not to mention higher crime, and again, job problems in that city as well. And frankly, you don't have a ton of businesses, Fortune 500 companies, moving to that area like you do in some other areas. So again, very tourist-focused, not pandemic-resistant, and overvalued at 41%, according to the data from Florida Atlantic University and the most overvalued housing markets. Okay, number 8 on my list. Number 8 on my list is, again, another city that I get constant questions about. And this area, this is Phoenix, Arizona, which we just had some friends get back from Phoenix a few weeks ago. And they were like, oh my God, we couldn't wait to get out of there. 115 degrees. Kids can't play outside. Just brutal heat. Anyway, Phoenix, 42% overvalued. Yes, you're getting a lot of migration and people moving out of California, moving to Phoenix, moving to Vegas. But again, as investors, that's different. That is different than a retail home market, okay? Totally different. Next on my list is Salt Lake City, Utah. Salt Lake City, Utah is, where was my Salt Lake City, Utah? Here we go. Salt Lake City, Utah is number 7 on my list. This, again, also incredibly overvalued. Salt Lake City, Utah, 42% increase. And again, people moving out of California. As a retail home buyer market, fine. If you're going to live there and you're willing to overpay and a bank's willing to give you a mortgage and you've got a job there, that's a whole different animal. But as an investor, I can tell you that this is not, unless you're flipping properties, again, unless you're building properties and flipping them, but as a buy and hold real estate investor, a definite market that you want to avoid. It's beautiful. Look how beautiful Salt Lake City is, but avoid it for investing. Okay, next on the list is Spokane, Washington. So this is beautiful Spokane, Washington. And Lindsay, I think, who's watching right now from Washington. I've been to Spokane. When I moved to Helena, Montana, I had to return my Ryder truck, my U-Haul truck, basically. I had to drive 4 hours from Helena and return it in Spokane. I was like, what? You mean to tell me there's no closer drop-off point? So I had to empty it in my house. And anyway, Spokane right now, 45% overvalued. We already saw Vegas. 45% overvalued in Spokane, Washington. And I don't know, Lindsay, who's watching right now, maybe you can speak to like job growth. I don't know what the job growth looks like there. But again, we've heard a lot of people moving to Washington State. Great for families. That's great. Again, as a real estate investor, way overpriced. And not a landlord-friendly state, by the way. Washington is not a landlord-friendly state. So again, a bunch of different factors go into it, even above just being overvalued at this point. Okay, this is next on my list is a difficult one for me. It's because I still own properties in the outskirts of this city. This is number 5 on the list of markets you want to avoid right now because of overvalued, and that is Detroit, Michigan, right there along the river there, across the river from Canada. So Detroit, Michigan. For a number of reasons, but overvalued prices in now we're talking Detroit incorporated area. So a lot of overinflated, condo prices, etc. I think you can still find some good deals and values in different parts of the outskirts. Whether it's if you're able to find a good deal in like Redford, Michigan, or Inkster, or those types of places outside of Detroit. But for the most part, you have some things to consider. Also, you have population decline in this area. So for me as an investor, when people are moving out, it's not a good sign. Now, I still own properties there, and they still perform well for me. I just did a couple of tenant turnovers on them, so they are performing for me. But again, I keep my eye on this market. It's not an area right now that I would be adding to my portfolio. I will definitely say that. But it is an area that over the years has been near and dear to my heart. But I am not right now at all adding anything to my portfolio given some of the demographics, overvalues, the overpriced properties there, the higher crime than I would like, and a population decrease. I mean, that's anytime you're seeing higher crime and population decreases, I mean, they go hand in hand. And so jobs leaving as well. So again, not an area personally that I would want to be investing in. All right, number 4 on my list is Provo, Utah. Provo, Utah, which we just saw. So this is Provo, Utah. Again, beautiful. We got a couple of Utahs in here. We got a couple on our top 10 list actually in Utah. Salt Lake City, Provo, Utah. Again, beautiful. And you can see a lot of the new housing that's being built. Glut of properties, overvalued by upwards of 46%. 46% overvalued there in Ogden, Utah, or in Provo, Utah. Which brings me to the next one on our list, which is Ogden, Utah. Now, Ogden, Utah is a number 4 on our list. I don't have video for this, unfortunately. But Ogden, Utah, that was a little town that I spent the night in when I was moving from Los Angeles to Helena, Montana, and I stayed over the night in Ogden, Utah, on the outskirts of Salt Lake City. It's in Weber County. It's 10 miles east of the Great Salt Lake, and 40 miles north of Salt Lake City. So this is more of I would say a bed-in community for Salt Lake City. So you can get better than normal property values than you might otherwise get in some other areas. But I will say Ogden, Utah, 49% overpriced right now. 49%. So again, maybe great for a retail buyer to move into that area, but not a great place to be an investor. Okay. Number 2 on my list. I get this question all the time from people. What about investing here in Austin, Texas? Number 2. Number 2, the second worst housing market for you to be an investor. Again, might be great for you to live in, but not, unfortunately, for you to be investing in.
So one of the things that the infrastructure bills are trying to do is also
so many businesses moving
the
there. So you've got definitely a lot of business moving to Austin. But 10 years ago, maybe, was a great place for you to snap up properties. Even 15 years ago. We had some folks over for a birthday party at our house who own property. They still have a house in Austin, and they're holding on to it. And they're not sure what they're going to do with it. They don't know. They're currently renting it. I know that they could sell it for a lot of money right now. The ROI on rent return, they even told me, is not there. It's just
Well,
they're holding on to it for sentimental reasons.
Added,
if that were my property, I'd be cutting bait and selling it.
Any other administration
but they're holding on to it for sentimental reasons. They may
want
to go back there at some point. They don't know. But the problem is that they've got long-term leases on there. So when are you going to go back there? You're going to kick people out?
Steady road to recovery.
So anyway, Austin,
overnight
highly overvalued.
So you see
not
the economy,
a rental and property investment spot at all.
That's
maybe a great place to live. Again, you're still going to be paying 50% overvalued just to move to Austin, Texas.
Monitor and invest in this
built a new
economy
Tesla
right
plant,
now
Apple building a headquarters there.
So
there are a lot of jobs. But again, for rental investing,
in terms of it being
which brings me to number one on my list. Number one, and I've done videos on this particular housing market before.
How important it is for the Biden economic plan to be passed by Congress and done in a swift manner.
Where is this other video?
Let's switch gears and talk about Texas, and particularly the anti-abortion law that the Supreme Court allowed to go into effect. I know the president has called on the Department of Justice to look into what could be done.
Broadcast over my broadcast.
What can the president really do about Texas?
Well, we have tasked the Attorney General and the Department of Justice to look at how they can ensure and protect women's right to choose. And we've tasked HHS to do the same thing and how to protect women's rights and how to make abortions available to them if they make that decision. And then we've tasked our Gender Policy Council to do the same. And we're going to continue to work with that. I think Speaker Pelosi has talked about legislation. And we've said on the campaign, the president has said on the campaign trail, that he supports codifying.
Can you tell me over which one it started? I'm sorry.
As the law of the land. And so that's our administration's position, and that's the work that we're doing to ensure that women have that right in a meaningful way,
Texas
not just
News.
On paper, but
to
actually
weird. It was Texas News?
Have that right if they decide to make that decision.
So then does that mean that we will
clip.
see the president
Okay,
actively campaigning for the passage of the bill that Speaker Pelosi says that she's going to introduce to codify Roe?
I didn't have my headset in.
Well, the president said over a year ago on the campaign trail that he supported legislation to codify Roe v. Wade.
Oh, sorry. There we go. That's what it was. Okay. So where did you, number 2 or number 3? Okay. I'm going to go back to number 3. Okay. We'll edit this later. So, okay. All right. Number 3 on my list. I apologize. We had some audio playing over this, but number 3 on my list of, all right, number 3 on my list, worst rental markets for you to be an investor. Again, we go back to the city of, we go to Utah, the state of Utah. And once again, this one is not too far from Salt Lake City. This is Ogden, Utah. So Ogden, Utah is about 40 miles north of Salt Lake City. And this was an area that I stayed overnight in a number of years ago when I was starting my career in television and moved from Los Angeles to Helena, Montana. I drove through Salt Lake City to sleep on the other side of that town, and I stayed there. So it was really like a bed-in community for Salt Lake City. And so you can get some great, you can get some great property out there, but it is going to be overpriced, relatively speaking. So compared to what we're seeing in Salt Lake City, yes, you might be able to, you might be able to get some additional land, but you're looking at prices that are really, really high. You're looking at additional prices upwards of 40%, upwards of even 50% overvalued in this area. So again, maybe great for a family, certainly beautiful out there, Provo, Salt Lake City, Ogden, but way overpriced, way overvalued for rental investing. Okay, let's go to number 2 on my list. Number 2 on my list, and I've mentioned this one a number of times. I get so many questions about this city, and that is Austin, Texas. A great place to live and work. If you're a retail buyer and you're going to live in a particular property and the shopping and Apple building a headquarters and Tesla and so forth, but you missed the boat on Austin. Like if you were trying to become an investor in Austin for single family homes or duplexes, not going to happen. You're going to be paying way through the nose, over 50% overvalued in Austin, Texas. just to be an investor there. So again, Texas is amazing. We invest in Texas. We build new construction properties in Texas, but we don't build them anywhere near Austin, Texas, for various reasons. But mostly because of the price. You just cannot get an internal rate of return on a price that's that out of whack with the rental income that you're going to get. So that brings me to number one on my list. Number one on my list, it's a place I know very well. I walked through many, probably, 50, 60 new construction properties in this particular town. It has a ton of people moving from California and other areas. So much so that they have signs, saying build a wall to keep the Californians out, because it's certainly cheaper to live here, but the property values in this particular city have skyrocketed. I mean, I'm talking tripled. So my mother-in-law had purchased a property in the high 200s, 300 range, and then a short time later was able to sell it over 500. It now is building a new property there, and this is in Boise, Idaho. So Boise is 80% overvalued. Again, you'll see this on lists of like best places to live because many businesses moving there. Yes, a lot of people moving out of California. But as far as single families or duplexes, no way are you going to find a great ROI on a property in this area. You simply will not, at 80% overvalued in Boise, Idaho. Again, a beautiful area, way overvalued, way overpriced, and there simply isn't going to be the internal rate of return that you would get from investing in other areas. And so, are you willing to move to a place where you're going to pay $300,000 more than you could have a year ago, 2 years ago? What happens when we see a sharp decline in market values? These bubble markets. I mean, I frankly could say these 10 are frankly bubble markets in many ways. They're very frothy, from a Vegas to Provo to Phoenix, particularly. You're talking like really frothy bubble markets. I would say none more so than perhaps this place in Las Vegas, Nevada, on my list. Again, big problems here. Not only are they overvalued, but you're dealing with this pandemic issue. You're dealing with the tourism. What happens when you have a pandemic? We have the Delta variant, of course. What happens if places are, forced to shut down again? All these jobs leave. What happens to you as a rental investor? Not only did you overpay for some ridiculous condo or a single family house, but then now you can't find tenants for the property because they're out of a job because they worked at the casino and that casino has had to close for an extended period of time. I mean, just think of MGM having to close and lay off thousands of people. Where are those jobs? Are they back? No. And Wall Street rewarded them, of course, at the same time. Being able to say, hey, we'll increase your stock price because you laid off a whole bunch of people. So these are the main reasons that I do not invest in these areas. Again, the list is long. I mean, it's 100 deep. 100 cities that we could look at. I mean, even you want to go down the list a little bit further. I mean, look at Atlanta, Georgia on the list, number 11 on the list. So it continues, we're just talking about the top 10 here, but I'll have a link to the full study in the show notes if you want to go and check your cities and see what are the most overvalued properties right now and overvalued cities. But I would say these top 10 stand out to me as areas I would avoid as a rental investor. But maybe a great place to live. I'd love to hear your thoughts on these cities. Drop me a comment below on these top 10 rental markets to avoid. And if you would like to take the plunge and invest in real estate, you want new construction properties that are fully done for you with a great team in the best rental markets in the country, that's what we do at Morris Invest. So go to our website, go to morrisinvest.com, click on the Book a Call tab that's right there on the screen. And when you're on there, and just pick a 30-minute time slot right there that you would like to book a call with us and that works on your calendar. And we will give you a call at that time to go over exactly what we do and the types of properties and really to try to custom build a program for you to build out your portfolio. So thank you guys so much. So let me see here Jocko John says, tech, can't live with it, can't live without it. Exactly. Hawaii, Tyler says the average median home is $715,000 with a minimum wage of $10. Yeah. Yeah, I think some things are just wildly out of whack. Lindsay was talking about Ogden, or the Stockton, or Spokane. I haven't been there in 5 years. It's growing, but it seemed overpriced even back then. It's interesting because it's not near the water. I mean, it's on the eastern edge of Washington State, Spokane. Beautiful from what I remember. I was only there a short time. I had a 8-hour day, so I wanted to get there, drop my car off, and then go back. But it looked beautiful in Spokane, and turn right around and get out of there. Actually, I think my wife flew out there to do an interview with a couple for like a financial show, and they owned a brewery there, if I'm not mistaken, a couple of years ago. And again, Phoenix also, just sprawling, expansive. Tyler says, Detroit is crime crazy. Detroit crime is crazy. Yeah, I haven't been in a few years. Here's Detroit. I mean, this is an area that's always struggled with crime, like Philadelphia. They've really tried to bounce back. Certainly they're downtown with their condos and a lot of the restaurants, but still not an area that I would be putting any money in anytime soon. Thank you, Patricia. Wow, $7.50 minimum wage in Utah. Speaking of, there's Provo, and Salt Lake City. So yeah, I mean, again, beautiful areas, maybe a great place to raise a family, but not a place that I would want to invest. Definitely not. And there's the link in the show notes here as well that Kelly just shoved in there. Top 100 U.S. markets for over or under pricing of rental properties. So thank you guys so much. Thank you guys for tuning in. Yeah, I had a clip that I was running from earlier on our show today, my live show on this massive infrastructure bill and what's going to happen there. So here was the clip.
I think that his actions and his statements since then are very
So that was the clip. So I apologize. I inadvertently hit the wrong button. So, well, thank you everyone for joining us on today's live stream. Again, we'll have links to everything we talked about today in the show notes, so you can make a more informed decision about your investing journey. We'll have links to book a call with our team if you'd like to book a call with Morris Invest and jump on the phone with us. We'd be happy to walk you through what we do and show you, our customized approach to real estate investing. Understanding your what your goals are. Maybe you already have a portfolio of properties. Maybe you don't. Maybe you're just getting started. So just come to the website here and then just click on book a free call, and a little calendar will pop up, and you pick the 30-minute time slot that you would like. You can also grab our Freedom cheat sheet while you're there. It's totally free. Just go to morrisinvest.com/freedom to grab that and figure out your freedom number as well. And we'd love to be able to jump on the phone with you at your scheduled time. You can see some of our new construction properties. These are in Texas here, West Texas. Very good rental markets. And not overvalued, but fantastic rates of return in some of the best school districts in Texas. And our team will handle all of that for you. So please go ahead and book a call with us if you're interested. So thank you guys so much for joining us today. I really appreciate it. And I will see you back here. We've got more content coming here on the channel. If you're not already a subscriber to the Morris Invest investing channel, please subscribe. By the way, we have our Q&A episodes that we do on a regular basis. So if you've got a specific real estate related question or financing or taxes or whatever, and you'd like an answer to your question, please give us a call. Just go to morrisinvest.com/Clayton. morrisinvest.com/Clayton, and you can leave me a 30-second voicemail question that I'll play on the show and answer your questions. So if you have any specific questions around real estate, I'd be happy to answer them. So until next time, everyone, go out there, take action, become a real estate investor. I believe it's the #1 way to build wealth.